Hello again, Monday morning, the 13th of February 2017, and as you can see, we've got some lines on the chart here. We've got a trade that's happened this morning, my trade, just based on this 15-minute trend here: high, low, lower high, lower low, broken the low there. We've got a trend in place. We can join the, as I did this morning before I took the trade, we can join the lower highs that make lower lows. It's broken that low there, so that's a trend in place: high, low, lower, high, lower, low. We have also got an ascending trend line that I've drawn on the chart first thing. Let's have a look at the hourly chart. Again, higher lows making higher highs, breaking the previous high. That's when I know I can validate the level to use as a ascending trend line. Once again, here or here, it's broken that high there, so I can put a line on there. This has broken, this price here has broken this high here, so that higher low can be used as a valid point to draw your ascending trend line. Ultimately, up here we've got another higher low that's broken the previous high here, higher high broken by this new higher high, so that's a valid trend line. And I expected the price to come down and test this trend line as it has just done now. Amazing how those trend lines work, but they work. So excuse me. Once again, as I said in yesterday's video, I find it extremely important to just draw the lines on the line chart, the close of the candles, because as you can see, if we'd have drawn it on the low of the candles here, it presents a totally different picture. Nothing to say that the price won't go down there, but there's nothing to say the price might reverse to the upside and resume the major trend, if you like, this big trend here. So that's why I'm happy just to get in and out quick, take my 8 or 9 pips or whatever the charts are prepared to give me, and just get out. And today's limiting factor was that I woke up a little bit late. Didn't want to disturb my other half, so I had to cut my trade short or close it before the Frankfurt Open. As you know, it goes bonkers about around and about the Frankfurt Open, the market open, and it did just that. So I would have suffered drawdown to the behind my entry, and then ultimately it's come down to the level. So perhaps a more bold trader, if you, for want of a better description, wouldn't be bothered by this. Me, I'm as I've said before, I'm a conservative trader. I trade every day, and I'm just happy to grow my account on a daily basis rather than be involved in trying to outwit, if you like, for want of a better description, the markets. Just get in, get out, trade like a machine. And here's the trend: high, low, lower high, lower low, as I said. Pullback, we've got the H1 alert that happened just prior to my entry, so that was all good as well. We know how reliable and powerful these H1 alerts are. The M30 would have happened earlier, as you can see, but at the M30 stage, the difference being we hadn't actually broken this low here, so we didn't actually have a trend in place, so couldn't have considered really entering safely on the M30 alert. But once we'd made that new low, we can see what happened, exactly what happened here. Pullback, then there was probably an M5 alert, because I wasn't about at that time in the morning. That was the M5 there, so nothing to stop you getting in had I been up and about at that stage there. The new low here would have been the perfect entry, with absolutely no drawdown whatsoever, and a good 25-30 pip move from that had I been about then, but I wasn't. So tomorrow's another day. Thank you for watching and have a good day.